Sorry.
That's okay. Okay, it's recording, I guess. Yeah, it is.
Okay, thank you.
Yeah, no problem. Okay, so yeah, so that's the purpose of doing bank reconciliation. And then reviewing your financial statements. So make sure to review your financial reports, including balance sheet and income statements. So again, if your business is incorporated, you do need both of these reports, a balance sheet and income statement. So in another word, income statement is also called profit and loss. So your accountant needs these two reports to file your tax if you're incorporated. Now, a lot of CPAs and accountant bookkeepers, they actually prepare these two reports for you. But some of them, they're like, no, just bring me your reports. I'm going to file your corporate tax. So then you need to make sure that these two reports are correct. So what is a balance sheet? Balance sheet basically shows your assets, your equity, money that you borrowed from the business, any loans and stuff. Income statement basically shows your gross profit, your net profit, your expenses, like your advertisement, marketing, software fee, and everything else. And then at the end of the report, it shows what was your net profit after all of these expenses. So your accountant needs these two reports to file your taxes. But if you are self-employed, income statement, in another term, it's called profit and loss. That's important to basically take that report to your accountant or bookkeeper to file your tax. Okay. And then when you're reviewing these two reports, I usually ask my self-employed clients to review the income statement line by line. So if, let's say, for example, I have, their advertisement for $1,000 for the whole year, I ask them, like, is that correct? Is that how much money you spend on advertisement? So basically, what happened is we're kind of catching up, checking on errors to make sure there's no errors. My expenses looks great. Everything else is looking great. So usually that error doesn't happen if you're using your bank and credit card statements for business purposes only. But if you're messing up with your personal stuff, then that's when that errors happen, even though if you're using a software. So, I mean, to me, if I'm doing somebody's book and it says $1,000 to spend in marketing, and then I'm actually capturing $1,500, maybe because I received the receipt, an evidence or a receipt saying that this was also advertising, but not necessarily that was an advertisement for business purposes. Maybe that was an advertisement for a different business, or it was not related to the business at all. But to me, as an accountant or bookkeeper, that looks like an advertisement, so I would have just captured that. So it's really important when you're sitting with your accountant, you need to review these reports and these numbers line by line with your accountant bookkeepers. And again, we can eliminate all of this with having a proper accounting system set it up ahead of time or at the beginning of the year. So that's when that's what it's important to review everything on your financial statement before it goes to your accountant. And the same thing with balance sheets. So if balance sheet says that I have a 20,000 loan, my original loan was 30,000, but now it shows 20,000. Why is it 20,000? I often question my clients. I'm like, is that because you paid your loan? So show me the history that you paid it. So then what they do is we go line by line on balance sheet as well, and we check to make sure the opening balance of the loan was entered correctly. If they already paid 10,000, then obviously they have another let's say 10,000 left to pay. So these are some of the checkup I do on yearly basis with my clients. So you guys should do the same thing. So then we're making sure that everything is being submitted to CRA correctly. Okay. So here's a question for discussion, I guess. So do I need both personal and business tax return to CRA? So I get this often asked if my clients are incorporated, if they have incorporation and they're the only partner or shareholder on the incorporate business. So I guess I just want to hear, do you guys have any idea? Like, do you often, kind of, are you confused with this? Do you need to kind of file personal and business tax?
From my perspective, I still work under I'm going to have to change this, but I'm currently still working under my own name. So my personal name, I'm not incorporated. So I just do one right now set of personal. When I was incorporated, then I had to do two, personal and business. Right. I don't know what other people are doing these days. Is that still the case?
Yes, yeah. So if you're self-employed, your business is under your own name. Doesn't matter you're operating under a different name, but so CRA still requires you to file T1 personal tax. So all you're doing then is you're attaching T2125, which is a small business professional small business tax form that you're submitting along with your T1. So technically, in the eyes of CRA, it's just one tax return. Yeah, okay, so that's that. And then if you're having a corporated business or incorporated, then what you would do is you would file T2, which is for your incorporated business, and then along with that you would still submit a T1. So that's where exactly, I know a lot of business owners, they mess up, is like because they think that they're the shareholder of the company, they're the owner of the business, so then they think that, you know, well, this is the only tax I have to file, but they don't. The confusion comes is, well, you know, they don't understand that the corporation is actually a separate entity. So it's a separate holder. They are just a partner of the business. Even though they're the owner, they're, in the eyes of CRA, they're considered a shareholder. They're considered a partner. Okay. So yes, you do need to file two tax. If you're a corporated business, if you're a self-employed, you just need to file one tax, which is T1.
I'm just curious, how many are incorporated? I know Sal asked that earlier, but I had to answer the door. How many are incorporated? Anybody in the group incorporated? Oh, okay.
Okay, so everybody's self-employed almost?
Sal, so as a sole proprietorship, I've written off everything as a home business, and I do a separate. All my numbers are separate, like in an Excel sheet, and then I take all my totals and I put that in. Is that the correct way to do it, or the 2125, is that a different form?
So when it comes to home office expense, what I personally do, and this is how it works with CRA as well. So you take the whole square footage of your home, and then so let's say your home, your total home square footage is 2,000, and then you're basically using a small room in your house, which is, let's say, 500 square footage. So you're actually dividing that amount by the total amount, and then you get the percentage. So for me, it's 20% of my home is used for business, because my room, the room I'm using right now, it's 500 footage. So I mean, the thing CRA is saying, okay, if you're using your dining table, if you're moving around your home, you're not allowed to use that. You're not allowed to claim that area or your dining table area as your home office expense. But I mean, it's really hard for them to keep track of that, right? So that's why they put a certain percentage. So like, okay, you can use it 15%, 20%. So technically you just take the whole square footage and then divide that amount that you're using, that percentage that you're using, divide by the total amount. And then you should be able to get that exact number. So what I actually have as a bonus for you guys at the end of the presentation, I'm actually giving you my own designed home office expense with the calculator. So that actually makes your life so much easy. All you have to do is put your mortgage total amount, put the interest, put your hydro, how much you paid for the whole year. The system calculates itself. So all you have to do is put the total amount for each of your home office expense. And then the calculator will just calculate it for you. So then that's whatever amount you get at the end, then that's what you're going to be putting in your tax. Okay. So sorry, I didn't know who asked me a question. Does that answer your question?
That was Desiree.
Desiree, yeah. Desiree, did that answer your question?
No, not exactly, because I understand how to divide the house and all this, but I was wondering if I was filling out the right, in the right place. Like in my own income tax, I file it under home business, because there's a section in your personal income tax where you can do the home business. So is that where I do it? Is that enough? Or do I need to do a separate portion that I don't know of? That you mentioned 2125, and I don't know what that is.
So are you self-employed?
I'm self-employed, and I am under my own name. I have a business name. The business is registered, but I'm not incorporated, so I'm the same entity.
Okay. So under the form T2125, okay, which is the professional income tax for small businesses that's being attached to your T1. Okay, so it's called Form T2125. On that form, I think it's the third or the fourth page that you have to claim your home office expense. Okay, so on that form, you would have to claim your home office expense. So what I would recommend is calculate, like, put all your home office expenses that so any personal expense that you're using for business purposes as well. So what you need to do is put up the total of those expenses. So for example, let's say your cell phone bill that adds up to, like, let's say $2,000 for the year. Okay, so take 20% of that, and then so that 20% is your business expense. The 80% is your personal expense. But if you're thinking, because a lot of us are nowadays dealing with phone and internet and online and everything, right? So if you're thinking that no, the 20% is actually very less, 20% I'm actually using for personal, but 80% I'm using my cell phone for business, then take that 80%. Does that answer your question now? Okay, awesome. So that Excel spreadsheet that I was talking about, when I share that with you guys, to be honest, that actually calculates everything for you. All of this, it will answer your question. Yeah. Okay, so check accounts receivable. So a lot of us are not dealing with accounts receivable because there are many, maybe a reason is because we're all online nowadays. I mean, I usually send my invoices to my clients. It gets paid right away. So whatever your term is, so usually we give our clients, 30 days term or 60-day terms. It depends on the type of your business, what's your term and condition on your business. But a lot of business owners, they do deal with accounts receivable. So you create an invoice and you send them to your clients, but they don't get paid, right away or within the 30 days or 40 days. So if you are having an accounting system, I would highly recommend to check your accounting system, the aging report, and find out what are the number of invoices that are still outstanding, that are not paid. So make sure before the year closes, make sure you follow up with your client, get your invoices paid, because then that's how you would know how much money you made. That's how you would know, that's how, I mean, I guess that's one way to kind of prepare yourself for the following year or the next year. If you know what's your cash flow position and how much money you have. And then also for the reporting purposes, you're not showing a huge amount of outstanding invoices. So
I have a client who hasn't paid an invoice from 2019. Mm-hmm. And every month I send an invoice. Just this last month, I got $100 from the person. So mm-hmm. I figure I'm just going to keep going. I didn't actually record that as a loss. I did record it. Did I record it as revenue last year? I can't remember. But that is actually from 2019. Like, so the revenue was earned in 2019, but I didn't get payment until 2020. And I'm assuming now I'm not going to get payment until 2021 because I'm going to just keep reminding the person.
Mm-hmm. So is the person willing to pay you still, but it's just delaying it?
Every time I speak to the person, there is a reason why the person can't pay, but a promise to pay.
Okay. So there's two scenarios in this. Okay. So if you are doing your bookkeeping as an accrual-based bookkeeping, so debit and credit, so obviously what I'm assuming is your HST was already submitted, and then that amount was already claimed as your income, and then HST was already collected and sent it to CRA, correct? Because if you write off, that means you would have to kind of adjust your tax as well, right? And the only reason you would write off is if you know the person is not going to pay me, and this is a loss to me. Okay. So you would basically take the total amount, and whatever amount you haven't received, you're going to claim that as a write-off on your income statement, and then the HST portion of it you need to adjust with CRA. Okay. To kind of take that loss back from CRA is like, okay, you know what, I lost the sales, the client never paid it, I'm going to claim this as a write-off, but then I need my HST back, right? Because technically you submit the HST. So that's one reason that, the accrual-based bookkeeping will help, but a lot of self-employed businesses, they actually handle their bookkeeping as a cash base. So when you handle as a cash base, basically it's money in, money out, right? You get money and then you pay money right away. So that will, so if you're handling as a cash base, that will actually help you with the HST, GST, that you don't have to submit it right away. But it seems, Christine, that you're having a accrual base. So in accrual base, that's what happens, is that your invoices will just follow as open invoice, and it's gonna, you have already reported income in 2019, and you've already paid tax on it. So that's the other side of it, to be honest, is if let's say the person end up not paying you, the only suggestion I have is just, write it off and then take, adjust your HST with the government. So you collect your HST back from them.
Okay, perfect. Thank you.
Yeah, no problem. So when going back to receivables, so what I do is, if you have the budget, to be honest, make your receivables so easy for your client that they do not have an excuse not to pay you. Nowadays, I mean, we all have so many apps and systems that we can automate our invoices. So I usually either do a direct debit to my client's account, or direct pre-authorized with their credit card, or I give them a credit card option to pay me. So there's no reason for them to say, hey, I can't pay you because, you only accept cash or you only accept credit card. So I give them so many options that they don't say no to me. So maybe create a system for yourself that gives you more option. I'm not going to say, kind of increase your expense, because when we sign up with these different credit cards, they actually do charge a merchant fee. So go with one system. Like I usually recommend either Stripes or Squares that has everything, that they can accept all sorts of payments. So go with either one of them, or if you're with QuickBooks Online has credit card payment as well. So it makes for your client easier to pay you immediately. Okay, with the accounts payable. So
I have a question, Sal.
Yeah.
I have a client who who maintain the prepayment purpose. Okay, sometimes his customers pay advance to him, and after that, when they receive the product, then they send the invoice, full invoice, send the email. So sometimes I have faced some problem about that. I make a chart of accounts as a prepayment. So when I receive the partial payment I make it a prepayment, and after that, when I got the invoices, and I make invoices, and then when I pay full amount, I make it partial full amount, and I reconcile it. So sometimes it's a big problem issue for prepayments. And after 1 month, every month I requested them to send me the statement, and I reconcile it. So prepayment is a big issue sometimes.
So with the prepayment, what I usually do, because when a client does a prepayment, that means that money, so they paid ahead of time, but you haven't really performed the service yet, right? So what I usually do in accounting, there's an account called clearing.
Right.
Yeah, so I usually leave that in the clearing account. And then once, I have all the invoices and the statement, then I actually move the money from clearing account and apply them to those invoices. So that's, Janet, more of an accounting bookkeeping question. So unless any of, these business owners, they're really pro in their bookkeeping, so they can handle that part. But as you guys as a business owner, what I would usually do when I train my clients in QuickBooks and they're like, oh, I received the deposit from my customers, or I actually received money ahead of time. So I create that money as a customer, I post that transaction or that money as a customer's deposit. So it's a deposit sitting there. It's a liability to us that we haven't performed the business yet. So once we perform, we'll slowly move the money from the customer's deposit to the actual invoices. Does that answer your question?
Okay, great.
Okay, so with the accounts payable, so you just want to run an account payable aging report. So that tells you how many suppliers you haven't paid yet. So you want to make sure you catch up on all of your suppliers. And again, when you are doing accrual-based bookkeeping, so that means the sales tax has already been claimed. So it's better to pay those suppliers. So then you're basically, cleaned up on that side as well, and you're clear with CRA. So make sure you pay your suppliers on time and as per the agreement, whatever agreement you had. And then posting all your suppliers' bills and expenses will reduce your tax liability as well. So when we say that, it means that your taxes are already submitted, your GST, HST account is offset with CRA already. Okay, so you're not liable for anything on that part. So again, so going back to the accounts payable, so again, nowadays we don't really deal with a lot of accounts payable because we have set up everything automatically. I mean, my bills are all coming automatically ahead of time. I have like pre-authorized setup, so I technically maybe like 5% deal with accounts payable. Otherwise, everything is automated at my business. So I'm pretty sure at your end it's the same thing. Yeah. So so if you are dealing with inventory, if you guys are product-based business, so count your inventory for the year, if not done already. So why do you need to count? Because you need to know what you sold, what you not sold, how much money you made, what was write-off. So a lot of, products, items, if you guys are owning a shop, a lot of things are write-off, maybe because, the products was not sold in the market anymore, or anything that was any purpose behind that product. So you can basically get a write-off of that and claim on your report as an expense. So that will actually reduce your taxable. And if you are service-based business, check to see which services are sold the most and which are not. So the one that are sold the most, basically, maybe you can, focus on that more, or maybe, you can create a more specific strategy around that service to improve. So I was dealing last month with a client. So what they did is, she's an interior designer. So she actually designed a whole restaurant in Toronto downtown. And then the client ended up never paying her. So she was like, I think they were owing her like $20,000. So, and to be honest, that restaurant was on the news. So by the way, yesterday or the day before yesterday, so they closed down. So my client was never aware that she can actually write off that. So what we did is we actually did a $20,000 write off for her. It helped her a lot. So it reduced her tax payable. Otherwise, she would have to pay actually $10,000 to CRA back, but now she doesn't even have to pay anything. So for the next 2 years, she's good because she had a huge write-off. So when you guys are not selling something, or you provided a service and you never got paid for it, or a product that you had that was never sold, or somehow it was damaged or something happened, make sure you actually count that as a write-off. And I understand the pain of doing all of this because it's a headache to calculate, to count all your inventories. But to be honest, it's worth it. It's worth it at the end of the year for your tax purposes.
So speaking of write-offs, I sometimes will gift things for example, there's 2 young ladies in the gift guide that I gifted spots. Should I be creating or recording the giving of those?
Yes. Yeah.
Okay.
That's a charity and donation from your gift donation from your business. So there's 2 purposes. So you need to kind of ask yourself the purpose of that gift giving. So was that just for marketing purpose, or was that for charity purposes? Okay. So if it was for marketing purposes, so under the marketing account, you would create a sub account called gifts for marketing. Okay. But if it's just for charity purposes, then just put donation and charity.
Okay. So, but with donation and charity, don't I need an actual donation or charity receipt?
So for your business, if your supplier is giving you a receipt, that's really good for your audit purpose. But if there are smaller business, there are smaller suppliers, they do not have that budget or that system to create you one, you can just claim it. Yeah. But then make sure you put a note to yourself and saying that, you dealt with the supplier and you never received, maybe because it was just a $20, but if it's like $1,000 or $500, I would say usually above the 500, the supplier definitely gives you a donation receipt.
It was a lot of $25, $50 gifts, like a lot of things that I, gifted out. But so it might not seem like, oh, it's only $20, but across the course of the year, do you think that would have an impact? Like, same with you ladies, if you have products that you sell and you give away, you pay for the shipping, that's, that's an expense that needs to be reported, right? Like,
yeah, exactly. Yeah.
Okay. So under the marketing, you can either do a gift donation or you do charity. Okay.
Yes. So here's the recommendation I have. So if they're a small supplier and they're like, you just kind of donated $20 or $10 here, there, and they're not willing to give you a donation receipt, I would definitely recommend to put that as, marketing strategy or other marketing expense or other business expense. Okay. But if it's, let's say if it's a bigger supplier where you give them $500 and then they were willing to give you a donation receipt, then just definitely do a donation receipt because it actually donation has more tax write-off than just a regular marketing.
Okay.
Yeah.
Perfect. Thank you.
Yeah, no problem. Okay, so prepare your tax documents. So after everything, after your review, your payable, your receivable, inventory, everything is done. So now it's time to kind of prepare your tax document so you can give it to your CPA or bookkeeper, whoever does your taxes. So prepare all your documents and reports and send them to your CPA or tax preparer. So one thing I noticed nowadays, a lot of CPAs, they just ask you for a report. They're like, okay, I'm going to file your taxes. Just bring me this report. But I swear, I'm telling you, make sure you talk to them, tell them that your report looks good, everything looks good to them. What's your tax payable? How much they can help you to kind of, reduce your tax payables. But just ask them more questions, because a lot of them, they're like, okay, just bring me your reports. I'm going to file your taxes. But I mean, filing your taxes is not an issue. Submitting the right information to CRA, getting you some sort of tax benefit is more important than just submitting something to CRA. Right? So a lot of them, they do that because there are a lot of systems out there that actually handles the bookkeeping for the client. So they're like, okay, well, I mean, there's a system out there that you can use, right? But I mean, yes, there are systems, but if you do not have the right, you don't know how to use the system, or if something is lacking, then it's easy to make a mess or create an incorrect report. So benefits of cloud-based accounting. So why do you need an accounting system? So basically, you will streamline your streamline your bookkeeping and accounting system. It's more efficient. There's no errors. And you can invite actually your accountant and bookkeeper right from your accounting system, and they can just, take a look at your report and file your taxes. So that's why I don't do Excel at all, because it's like, you're kind of saving it and sending it separately to your accountant. But with the software, it's easy for them to access everything, and then it actually eliminates a lot of errors and stuff. So that's basically the last step, where you have to prepare your document and submit it to your accountant. Okay, so last, but I guess I have a couple more slides, but yeah, last but not least is a plan for the year. So build a solid plan for the upcoming year. So once everything is ready, your CPA reviewed everything and said everything looks good when it comes to tax season, we're just going to file your tax. So make sure to plan your next year. So build a solid plan. If you have a new hire that you have to do, if you need to make more sales based on your profit and loss, maybe focus on that. Maybe if you did not have a better accounting bookkeeping system, maybe it's time for you to set that up and basically strategize your process and have a workflow in place. So what I mean by workflow is that, there are a lot of apps. I mean, Christine will probably know because she's a techie. So she would, there's a lot of systems out there that actually kind of automate your work and saves you time and money as well, and hassle.
Well, definitely one of them that has saved me huge amounts of times is QuickBooks.
Yes, yeah, for sure.
If you're not using it, you might want to check it out, because it does cost $22 a month, but I cannot tell you, just sending my monthly invoices has been a dream now.
Yes,
and making it so easy for clients. Click the button, they pay.
And then, so streamline your work process. I know there are a lot of accounting systems out there, but make sure you're signing up with the right ones. So QuickBooks Online is very, very popular. In QuickBooks Online, there are different versions. So make sure you're setting up the correct version. So with Xero is the other biggest accounting system. So check out that as well. With the FreshBooks and Sage, they're still kind of struggling. FreshBook is pretty much out there, but they're still struggling with a lot of stuff, because I personally got certification on that. And I started working with a couple of clients, but there's a lot of stuff that they still need improvement. So yeah. Okay. And then take time to reflect. So basically, once you're done with everything, go through the checklist. So make sure you have everything ready before the year ends, and then just kind of, ask yourself some questions. Did you really meet your goal? And was your business, giving you income and joy, or was it more of like, kind of headache for yourself or hassle and you really struggled? I mean, it's all good that we're all struggling. That's fine, but that's how we learn, right? So did you really, I guess kind of, just sit and reflect and take care of yourself. And what else I can say? So hit the ground running for the new year. Any question?
So there was one question from Kathy in the chat box that I saw. And the question was, if my husband and I are both self-employed and we both work in the house, can we both claim the 20%?
Yes. Yeah, as long as you're not sharing the same room, as long as you guys are in the separate area of your home and you have dedication desk, not to, you know, kind of move around everywhere. Yeah.
Okay, thank you.
Yeah, no problem. Yeah, any other question?
Elizabeth asked that question earlier about having separate bank accounts and separate credit cards. I think you addressed that it really is, even if you're a sole proprietor, it's a good practice to do that.
Yes, yeah, exactly. So the biggest thing it will help you if you have a separate bank account and credit card is it's helping you to reconcile properly and actually know, is your business worth working hard on it, right? Are you really making money on the business? Because otherwise what happens is you're messing up your personal fund and your business fund. And then at the end of the day, unless you have very dedicated bookkeeper that actually separates everything for you, like kind of allocate everything separately, then you get a good number. But otherwise you're, you know, kind of mixing up two numbers together. Yeah.
So I don't know if you just saw me do a big laugh there, but Laura said, okay, my question is, who wants Sal wrapped up as a gift under the tree? Yeah, I'd love to have Sal at my house for the weekend to help me straighten my crap out.
I'm not kidding. Seriously, that's what she needs to do, is promote like gifts of herself somehow. I don't know, but amazing.
So Sal, tell us, what services do you offer? How do you help small business? I know you trained me on how to use QuickBooks, but what else do you do?
So I've been bookkeeping, accounting for my clients, and I teach DIY bookkeeping, so do-it-yourself bookkeeping. I teach them through specifically through QuickBooks Online. So there's two ways I teach QuickBooks. One is just how to use the software. The second way is to use the software, but also do your accounting bookkeeping by yourself until the end of the year. And then all you have to submit to your accountant is your financial reports. I also do year end for them. So a lot of accountant, and again, I'm going to go back to this question, is a lot of accountant, they ask you just for final reports. So I actually, before they go to their accountant, I sit down with them and do their year end checkup. So I prepare the two financial report. That's really important, the balance sheet and profit and loss for them. Everything is ready. They're just going to their CPA and file their taxes. If you are willing to file a tax with me, I do have an in-house student CPA that does for me. She's actually from North York, Ontario. So she does a lot of corporate tax filing for me. And yeah, so I do a lot of hands-on training.
Yeah. I have a question. So do you actually have any kind of course or training where you say, okay, it's January.
Yeah.
Forget about what you didn't do in the last 20 years you've been in business. This is what we need to do every month.
Yes. Yeah. So
every day, like, I feel like I'm at that point again because my business has changed and pivoted. Mm-hmm. And it used to be products and now it's services and it's virtual. And I feel very, I don't know, ladies, but I feel very, unsettled about this last half of this year and how my business changed and make sure I'm capturing the right stuff. Mm-hmm. But do you offer a service like that where you guide someone monthly? Do you have some kind of like monthly retainer, or is that your bookkeeping fee? Can you explain a little bit more about that?
Yeah, so I'm glad you brought that up because I haven't really officially launched or officially announced, but I recently brought up I'm offering actually business mentorship. It's called business mentorship. So what the business mentorship does is all of what Christine asked basically is every month, it's a guide that I take my client's hand with them and I meet them in a group or individually I meet with them and then kind of, take their hand and advise them what to do, what not to do. So whether they want to meet privately with me or they are meeting, within the group, it's absolutely fine. But it's just, so business mentorship, I've just launched, well, I haven't launched, but it's in my website, but I'm kind of hesitant to talk about it now. But yeah, that's the purpose of that basically. So DIY bookkeeping is covered on that. Business strategy is covered on that. and a lot of other things. So the reason, and workflow as well, and also all these systems that I'm talking about, the HubDoc, Receipt Bank, I literally set that up for you during that business mentorship. Yeah. So the reason I kind of came up with that, Christine, is what happened is for these 3 years that I've been training, is a lot of my clients, when I meet them, sometimes it's not even about QuickBooks. They sign up with QuickBooks, but we ended up doing something else. Like I ended up either setting up a system for them, or I do their bookkeeping, or I do something else. So I'm like, oh, you know what? There's a need for it. So let me just, come up with this program. Yeah. So I haven't really officially advertised or did
I
it.
think well, for those individuals who are scaling up, right? For those individuals who are scaling to try to figure out how to move from, oh, it was really easy to do in an Excel spreadsheet. But when you have income coming then from multiple streams, like now I have income coming from so many different little avenues that I need to make sure. So, okay. And so on your website, you have that. And is this a monthly fee? How does that work?
So it's a 1 month program. On a monthly basis, we meet for 90 minutes. And then after a month, I basically call it mentorship support. So after the business mentorship, the 1 month is over, then we move on to the monthly support.
Okay.
Business support, yeah.
Right. So like maybe you and I can follow up with each other.
Yeah, for sure.
I don't want to take more, but I can see a huge need for businesses to have a little bit more. Because even if you have an accountant, getting everything and having it all prepared and being up to date every week and every month is a challenge.
Yeah, absolutely. Yeah.
Awesome. Does anybody else have any questions? I know some people have indicated they had to leave. We've gone a little bit past our 11:30 end time. Did anybody else have any questions, thoughts, inquiries?
I'm just going to share, Christine, that home office expense that I'm going to be sharing with everybody.
Oh, yes, please.
So this is in Excel. And then there's a calculator built in within this system. Okay, so this actually made my life so much easier. What I do is when my clients are asking me how do they submit me their home office expense, all I do is ask them to fill up this for me, and then they submit. And then in their accounting system in QuickBooks, all I do is one transaction at the end of the year. Okay, so home power, electricity. So if you take your electricity bill for the whole year, how much you paid it, you just need to fill up this. And the good thing is that it actually calculates in here for you. Okay, so all I need at the end of the year is total claim and the percentage. These two lines your accountant and your CPA needs. And then if you're doing your own bookkeeping, all you have to do is at the end of the year is one transaction and attach this as a proof. Attach this for audit purposes. Also, I'll give this to Christine and then she can just share with them.
Yeah, anyone who registered, I'll share this out along with all of your contact information. And if anybody wants to follow up with Sal or, book a one-on-one session with her to get your systems in place, I would highly encourage that. All right, excellent, Sal. I'm looking forward to using that. Does anybody have any questions before we end off? All right, Sal, if you want to hit stop recording, that would be great. Ladies, thank you so much for your time.